Big Bear AI is off to a good start at pre-market and then begins to sell off right at market open. And we see some of that kick in today. We got some red in the markets. As you can see, we got this trend that's really continuing up with Big Bear. It was just back in October. We started covering it around $1 a share. Saw it push up to $10 in February in this big AI defense boom. And then we see it actually leading the way today. It's down red, but most of every day the past really 2 weeks, Big Bear has been on the top of our list in the green. So after this April recovery up into these levels, I think we got some drawings and we can kind of get down to business here. You got this uptrend it broke out of. It was in this hyper bull trend the past few weeks here into July. It was just finding support, continuing up, and then using that previous resistance as a support, continuing up, using the previous resistance as a support. This is just classic hyper bull trend. So we saw it during the last 2 weeks, really from here to here, was about a 136% increase. So very large increase in potential, really drives up to previous highs. We did see it get rejected. It pushed up yesterday up to almost $9 a share before selling back down, and we see it at $7.15 right now. We're covering it this morning. What we saw is it sold back down to this previous resistance level at 715. Now this hyperbull trend has kind of broken pattern. You see how maybe it was more tight, it was very consistent. Now we see it break through this support level on the hyperbull trend, find this previous resistance at about $7.20, and still kind of struggling there. We see it push down to the 200-day moving average, and maybe the next level, I guess, really is what we're watching here, is if it can hold that $7.20 range, or if it continues down. Now, we have tariffs get reintroduced. That's obviously something that could impact the market. As far as effects recently, we do see it. Nvidia shot up and ended up hitting the $4 billion market cap, but then we see a lot of tech kind of sell off after that big spike. It looks like overall, though, SPY holding a little bit positive at 0.18%. So what we have going is now new tariffs introduced. Then you have maybe more spending on defense, which is pretty favorable for a company like Big Bear. Now, what's going on with Big Bear? Well, I think they haven't had any recent news in the last day or so. We could check and see. Yeah, it's been about a week or so. The last thing that we were watching, so there's a couple contracts, Department of Defense, that's a good one. There's the UAE strategic partnership, so they're even going more international, which we'll get into. Then they're working with Palantir as well. And then outside of that, the main thing, which is actually the main driver of their past revenue and what we see in the financial side of things, when you look at the quarterlies kind of improving quarter over quarter through 2024 from 33 million to 39 million up to 41 million and then 43 million before selling or having a little bit of a plateau there, was not the travel and trade. It wasn't this very scan that we saw the biometric passenger deployments at all of these airports for this technology here. It actually most likely was not this technology that we've seen firsthand, that we've been able to really elaborate on as we travel. And I'll show you guys, hey, look, I'm getting my face scanned at this airport. Do you see it? It's actually working. Real world usage. And then recently with the article that came out with on all of the new airports that they got put into, the revenues were not as a result of that, most likely. When we saw the revenues kick in through 2024, kind of getting into 2025, a lot of what we saw were revenues from, there's a Department of Defense contract, there is a Navy contract, there was this contract with the Army that was up there around. So there's the Navy contract. You got they did announce the Denver International Airport. That was just kind of like late 2024. They started getting into airports, but that was just after they got this contract valued at 165 million for U.S. Army and information management, which is another reason why, that's kind of good because financially, like the market, we know there's volatility, there's the tariffs, but potentially more increased spending on defense. They had some defense contracts already kind of building their revenue. And then on top of that, now recently, what we're looking at is not just that Army or the Department of Defense or the Pentagon. It is now kind of building into not just the Air Force contracts or what have you. It is this new deployment of all of their biometric stuff. So again, you got Chicago Airport, John F. Kennedy, Los Angeles. That's what's going on. As far as holders go, you got AE Industrial Partners, big holder there, big amount of cash there, about 63 million, almost 64 million shares. When it comes to like BlackRock, Vanguard, State Street, Charles Schwab, the holders of this company, you see a lot of increased positions into this year. Last year when we were looking at it towards the end of the year, it was a lot smaller. We see more increases of industrial, you got industrial partners and also the main institutions that are buying up this company. Now, one thing I talked about the other day was what do institutions do before they sell? Because we've seen it run up that 137%. So from now we get into, financials have been looking good. And one more thing on the financials before we get into the chart, actually, they did decrease their liabilities. Their liabilities were holding kind of high, even above their assets back in December. And that was the one thing I was like, guys, they need to get these liabilities down. Otherwise, it's just a classic, they're not going to free up cash flow. They're not going to be able to trigger profits if their liabilities are so high. So they kind of took a hit. They had their net income go pretty negative back in December, and they ended up paying down their liabilities here and basically cut their liabilities down over 100 million, over 150 million dollars. They cut them down. So now they look healthy. You see how that orange, the liabilities is much lower than that of their blue assets. That just indicates some financial health in the company. So when we're looking at the chart, so we kind of get into that, we were talking about it yesterday. We said, what do institutions do before they sell? Well, they've made 136%. Could we see it sell back down? Absolutely. It's a $2 billion market cap, and they had over 100% gain. It would make sense that we see some corrections. Now, right now, they're leading AI down about 6% on the negative side, and they've sold down to this support here. Now, the hyper bull trend that they continue is they do bounce here and maybe make this recovery, which on an info line really puts us, if that happens, when that happens, we would see about a 15% recovery to previous highs, about 21%. But we're also looking at this potential downside, another potential 10 or 12% sell down into that $6.35 range. Now, why would that happen? So finally, kind of finishing that thought, institutions most likely don't just sell. Do they sometimes? Yeah. What is the more common thing they do? They want to essentially have the price drive up more before they sell. And I think that could be what this was. Maybe a little bit of this push up here, driving that price up and then having that sell off from those highs it's like the smaller institutions or the retail traders, they're going to, put more money in when they see the price go up, which creates more liquidity essentially for institutions to put in this 20% sell off on the stock. 20%, we're talking about $400 million or over that, almost $500,000 in exiting capital, which again, they're still a $2 billion company. Like it's a pretty, I don't even know if they're a $2 billion company now after the moves here. It looks like if I refresh the page right now, they were at 2.07. Yeah, they're at 2.07, so they're still there. But that's what happened. We see institutions sell and have some orders kick in. Defense contracts still looking strong. The fundamentals on the company from a news perspective still looking strong, but definitely from the valuation of seeing that push up and then now at this $7 range. Now we're watching here to see how it holds. If it sells back down here to this $6.20 range, or if we see it find support at this 200-day moving average, which we could see. We know that green line oftentimes in a bull trend, you might see it sell below that EMA, correct back down, but that green line, that 200-day moving average, oftentimes can act as a support in a bull trend, or in a bear trend, it can act as a resistance. You see it hold above there. So when we're looking at it here, we see it sell down. To see it hold above that SMA would be good indication, and so we'll be watching it closely. We do have new trends developing here, so we're going to have to most likely regroup on what we start to see play out as it's kind of broken this hyper bull trend, and that's what we'll be really fundamentally watching throughout this whole week. So we got 3 more days left to market, a little bit of a correction today. And when it comes to the big bear outlook though, things looking good. This is very healthy, very much part of a longer term investment. I'm keeping all of my long-term investments. Again, we started covering it back here. I've seen the volatility. I've held up to $10. I've held all the way through down to $2.30. I got about a $2.80 average. So, this is part of the longer game. It also presents short-term buying opportunities or adding to your position if you're long, or even if you're looking for a shorter term trade. Seeing it validate here, maybe push back up. Again, it's about a 10 to 15% margin for profit. If we see it sell back down, okay, great. We could potentially see that 10 to 40% upside. It's just a matter of managing risk on the short term, having a plan. It was just this morning, we were doing our daily live trading in Stockmates. I think it was Andre said, okay, I'm buying here. I got to stop here at 720. He was buying some of the dip. I didn't trade this morning because, well, I have some trades going, but we were just kind of watching the market this morning. I was like, yeah, it's selling off. It's bleeding a little bit. I think it was here he entered. He said, I gotta stop here at 720, and I'm watching. I said, hey, that's a good trade as long as you got a plan. He was looking for that upside. He managed risk there at 720. And what does that mean? Hey, more opportunities to have that capital freed up with little risk and looking for those 10 to 20% swings up that you can take advantage of. So if we see, let's say, there is that opportunity, if we see them bounce here, we start to see that validation kick in. Again, it's about a 5 to 15% margin for profit if we see that kick in with maybe some good indication of a solid support here if it holds this previous resistance level at about $7, $7.20, somewhere in here. This is where it's consolidating now and kind of found a support there right after that recent sell-off. So we'll be watching that level closely, and hopefully you guys enjoyed. If I earned your thumbs up, smash the like button. Thanks so much for watching. And again, if you want to join us in Stockmate, it's the second link in the description to join us. I send you a free t-shirt. I'll give you a call personally, and I would love to get you access into our earnings for next week. I think it's heating up into this next week. All the targets along with the pre-market or the after hours time of the company's reporting earnings. And then on top of that, you get to surround yourself with other investors that are in the group that are building out their insights and sharing them with the community, which can be super awesome for those of you that are looking to grow. And there's some really good testimonials. Like I just see David here. He made 100% all-time returns in 4 months, grew his portfolio from 14K to 28K. He's one of our first Stockmate members. He says, thanks. And he's doing this so he can quit his job at Amazon. That's epic. And David and I have worked one-on-one. He's really committed. He's been working hard, and he's been making some gains. Lawrence today had some wins, but there was also Lawrence saying, hey, I'm really finding a lot of value. There's no big aha moments, no eureka moments, no, guys, buy this before it's too late. It's about feeling confident to execute a plan. And as it turns out, he says he's got adequate risk management safeguards in place to mitigate losses. He says the amount of time that he put in has been in half. You don't have to spend hours in front of a screen. You got to have a plan, make fewer trades, he says, investing more money in each trade. And so, if he says he's learning once his stock gets into the green, he's assured that the worst case scenario will be to make less gain than expected because he's managing risk. And, he said that it's been worth it for him. And I share that with you guys, not to persuade you, but to give you a perspective of what members are seeing. And just this morning, Lawrence said he made over $1,000. He's like, I traded, this stock. I was trading this one this morning, and it's all inside our live sessions every morning, Monday through Friday. You can get lifetime access for something that happens Monday through Friday every day. So not a recurring payment for a limited time. Next daily live trading is happening in 23 hours. If you want to join us there, it's the second link in the description with that extended sale for lifetime access right now. Thanks so much for watching, guys. Do consider subscribing if you got value, and comment your thoughts below on Big Bear. I'll see you in the next video. Take care.